Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on Roku. Reason for that, as you can see, it's down a little over 11% today. Reason for that is some analysts reduced or changed it from neutral to sell, I believe. Cut expectations and also reduced its price target. So when you see this, you do expect the stock to do somewhat of a movement, but having over 11% move on this kind of news, and it was only really one big name doing it, it's definitely an overreaction. So we would expect to see some sort of a bounce coming in soon. So we'll do our normal analysis, and that will be starting off on the daily chart to plot any gap fills, because that's the first thing we always look for, because they tend to be significant levels where you tend to see buying and selling pressure come in, or buying or selling pressure depending on which way you're looking at it. So firstly, we only look, or personally I only look for very clear gaps, and the reason for that is they tend to have the biggest level of movement and coming into it. And as I'm not personally, or as I'm not actively buying off or like trading as an entry the gap fill, and instead locking in profits at gap fills, we tend to only go for the ones where there's going to most likely be a big reaction, because we want to get in before a stock pulls back if we're long, for example. So looking at it, there's only two key ones that stand out to me very quickly, and that'll be that 420 level, just because it never came back and filled it completely. And then the only other one is the one created yesterday, and that'll be around that 276 level. Now when we're looking at these kind of gap fills, especially when it's kind of gapped this far, we will also usually look at the bottom of that gap candle. Reason for that, and that this is at a 269.50, roughly around that area, the reason for that is when a stock pulls back, if it doesn't quite fill the gap, it will usually touch at least the bottom of the candle, and you'll see this all the time. For example, kind of gapped here, you'll see it pulled back to kind of the previous day's candle, and didn't kind of fill the gap, but it got very close, or did touch the day of the previous candle. So you tend to see it pull back, as it's usually an area where, in this case, sellers will step in, because people just be looking to lock in some sort of profit there. So usually we look at that level as well. And I don't think I usually go over it too much, so I wanted to point it out, because I do notice that in videos, for some reason, I always forget to include that. But now we'll go over to the deviation channels, and we can start looking at deviation zones, so we can actually start seeing where we'll be looking to buy. Roku was one we're doing analysis on as well today, because we did actually start trading it today, or I personally started trading it today. So going on to the 4 hour, we can see that we have a buy zone at around 242.50, and it did hit this target today, as you'll see when we go back to kind of like a 5-minute chart. And then very close below, around 241.50, we then have the second deviation on the daily as well. And that's one thing we always like to be seeing, is when the deviations are close together, because it makes the levels more significant, and usually we tend to see stronger bounces off these levels, and even more likely to have a reversal at that level. Then obviously that bit lower down, if for any reason the stock was to continue down low, which I don't personally think will be seen, but if it does, we then have the third deviations, which on any large cap is always a good time to be buying, whether that's for trading or investing. They're usually very good discounted price to be getting in, especially if there's no real fundamental change. Around 198 and 189, again another key buying level. And what you'll also see lining up with these third deviation on the 4 hour is that it's very close to the psychological $200 level. So more likely than not, you will tend to see a big bounce at this level, because one thing we always talk about, psychological levels, and especially $100 levels, they are very significant. So if you tend to have a deviation lining up with a large psychological level such as that, you tend to see a very good reaction. And again, the key psychological levels we look for will be $5 and $10, and by that I mean like 205, 210, 215. You tend to see reactions at these levels, but the key ones will always be the whole $100, for example, $100, $200, $300, big reactions. Then also the $25, $50, and $75, for example, $225, $250, $275. You tend to see big reactions at those levels. So we will be doing that when I show you the price targets for this kind of stock. Now we will also place, getting into our kind of price targets, or if maybe you're looking to trade a different way again, you may use these deviations differently than how I do. But for an area, I'll be looking to lock in profits. At the first area will kind of be this 286 to 292 because that is the first deviation. So if Roku was to continue further down, you tend to see it bounce off a deviation, come back, retest one, and then if it's going to continue lower, it will usually do it from that level. That's why we tend to lock in the majority of a profit at that deviation. And then again, statistical means, we will be placing resistance zones here, because if the stock comes here, we usually like to get out of the trade, if not lock in the majority of profit at this level. Reason for that is that statistical means you no longer know where the stock's going to go. For example, right now with Roku, it's at the second deviation to the downside, so with that we have more chance of the stock bouncing and going up, and that's why we take long bias trades when it's below kind of the statistical mean. Once it comes into statistical mean though, it has no direction. It could quite easily go up, could quite easily go down. There's no reason for it to go either way unless there's a fundamental change. So that's why when we come into this statistical mean, we usually get out of the whole trade, if not the majority of it. And again, depending on how long you're looking to be trading, how long you're looking to be in the trade, again, your price targets may change a little bit. And if they do, all you need to be looking at is just be looking at these standard deviation channels. And again, these can all be targets for yourself. But the problem you need to be looking at, if you don't have access to deviations yourself and you're going strictly off these videos, we would make an updated video if Roku passes 350, and the reason for that is these levels will have changed by the time the stock gets back to that level, or if it even gets back to that level. So for example, by the time Roku gets back to say $375, the deviation will no longer be at $375. It most likely would have moved a few dollars, if not at like $5 to $10. So it's something we can give targets up to around say 345, but by the time it gets past there, it's most likely going to have a significant move in current price. So we will go over quickly a 5-day 5-minute candle or chart, just so I can do a quick brief on what I expect to happen with Roku and kind of my plan personally trading Roku. So with right now, as we can see, it kind of came down to our second deviation on the 4-hour, so our first buy zone, and you can see that at 252 was its low, and that's also where our buy zone is. So it's kind of touched our first buy zone. We would expect it to push down that bit further and touch that other second deviation around 241.50, and then that's when I would be expecting that break and would be looking to have a first big target of say 170, because that is the kind of bottom of the gap fill. But we would most likely lock in some profit at 250. Like I said before, it's a key psychological level, so it wouldn't be unlikely to see Roku come back, retest this 250, and if it's going to continue down, this could be the level where it will pull back to before continuing lower. So it makes sense to be locking in some profits here, and even if you don't want to lock in profits, maybe a good time to maybe move your stop loss a bit. But we would expect it more like than not to kind of continue and at least push to 286. The reason we say 286 is that's the closest full deviation, and you tend to see stocks trade deviation to deviation. So if we're going from the second deviation on the 4-hour, we expect it to come back and at least test the closest deviation, which in this case would be 286. So that would be kind of where we would have our first key large area to lock in profits. But again, we probably would take off a little bit of profit and at least move our stop when coming into 250, 269, 276, because 250 psychological level, 269, 276 are the gap fill levels. So if you remember, if we go onto a daily chart, that level there is just that gap fill that we would be looking for. And then we would expect it to push through. We would look in the majority of profit coming into the 286 and the 292 level. At 292, I'd personally probably be out of the trade fully by then. But if you are a bit more optimistic, or you just don't mind holding for a longer amount of time, you could have targets of 330, 345. That comes into statistical mean. So from here, again, we have no direction when it comes into here. So usually I would be fully out of a trade coming into statistical mean. But if you are holding on further, whether that's your plan or you're more investing, then these are the upper targets where maybe good areas to be locking in profits. So hope you enjoyed the breakdown on Roku. Hope that gives you some insight into the stock. If it helped you, definitely drop a like. Hope to see you in the next one, and that's it. Peace.